So we have this news, right? And the news has to be interpreted. So you can have good news for a stock. It doesn't mean the stock's going to go up. You can have bad news for the stock. It doesn't mean that share price is going to go down necessarily. So the rule is don't trade the news. Don't trade news. And then put here, news is often already factored in. Factored into the share price. Into the share price. Like, for example, if you have, if there's a tornado like in Hawaii and like the price of pineapples, is on the line, and then they show on the news, they show the pineapple trees going into the ocean, just the tornado, everything's destroyed, At that point, the price of pineapples is already going to be down. So you can't really, it's too late. Once it's on the news, it's already factored in. So I have a rule, don't trade news. Not only that, another thing about is news is not reliable. Put that down. News is not reliable. Meaning, it doesn't determine the stock's going to go up or down. Apple can make earnings and the stock can go down. Apple can miss earnings and the stock can stay stable or maybe even go up because it could go up because they've already factored that in and they've already planned for that, you see? Philip Morris can get sued and the stock can go up because they say, hey, they only have to pay, $1 billion, I was going to be more. So at least we know what it is. So it goes up, understand?
Yeah.
So just because you have bad news, GME is a perfect example. Doesn't mean stock's going to go down. You can't do it based on that. You can't trade based on that. So if for the 10 stock criteria, news is not one of them. Bad news, good news. That is not a criteria. News, this is trading, right? Is not a criteria for stock selection. You can watch the news, you can get, informed in it. Generally, it's just random facts, but don't trade based on that. Does that make sense?
Yeah.
Give me four criteria of the 10 stock selection. Can you do that?
Yeah.
Your memory?
Yeah. We have 5-year chart.
5-year chart.
Can it double in 2-3 years?
Can it double 2 to 3 years?
Dividends?
What about dividends? Dividends.
I'm saying, does the stock provide a dividend?
Pay dividends, good.
And then PE. Or instead of dividend, we could substitute it with volume. Volume and PE. That's like the main
volume. What about volume?
Are they beating their average volume to that stock? So if a stock, ideally the numbers you gave were 2 to 4.
That's not it. That's not it. They don't have to beat their volume or underperform the volume. They have to have a number. What's the number?
2 to 4.
Right, and 2 to 4 million is a day, right? That means a whole lot of investors are in the stock. That's what it means. It has support because of that. So many people are in the stock, it has support. You probably have billions of mutual fund managers in that stock, and they're probably not going to sell it for no reason. That's why it's good. And then PE, why PE? What does PE mean? What PE?
How's the company valued in the market?
That's not PE. PE, the point of PE is
shows if the company
it has what?
It shows if the company's making profit.
Right, profits. If the PE is a dash or 0, there's no profit. But there's a PE, there's a number, a positive number, there's profits. So that's what you want. Want a PE, which means it has a positive number, which means it's profitable. And what's our sweet spot for the PE between 1 and 1?
28 to 100.
Yeah, that's a general number, but it's showing that we don't want to have a PE of like 10 because it's boring, but we don't want to necessarily also have a PE of 1,000 because obviously that's like they're trading like huge multiples of what the stock value is. You know? But a hot stock is a high PE, so that's a criteria to buy. Yes.
Mm-hmm.
Good with that. I put the 10-year chart, and you put 5-year. I'm not going to really argue. I mean, 5 years is pretty important too, but 10-year to me is better. You know how that they say how many businesses fail in the first 10 years? Like if you invest in the market for a couple decades, you would see all of these stocks come and go. Honestly, like within a few years, they're on Kramer. Look, they're throwing them on the news. Look at this great stock people get in. 2-3 years, poof, it just goes down. It did not last a test of time. So when I say 10-year, if stock has a good chart for 10 years, the company is successful. They know what they're doing. The CEO knows what they're doing. The board of directors, they know what they're doing to perform successfully on the stock market. And not just business-wise, but also to perform as a stock. That's so different. There's one thing to be a profitable business. It's a whole nother thing to please shareholders, to corral and move shareholders to your cause, right? Like you can have a private company that's not on the stock market. They could be doing great, but a company that's on the stock market that's doing great, that shows a lot. I can comb through 3,000 stocks, and there's only like 30 stocks that are really good as far as I'm concerned. So it's like most stocks are not good. You just can't pick any stock you want. You want to pick something that's tried and true. You want to do your homework. You want to have standards. We have standards. Write this down. We have standards. We have high standards. High standards. We can't buy or trade just anything. We don't buy or trade just any stock. Okay. Any questions on that?
No.
Okay, so we talked about the portfolio last week. I think you got a lot from that. Did you get a lot from that? Get a lot?
Yeah.
You're going to do a 25 million portfolio on session 12.
Mm-hmm.
You ready for that?
Yeah, I'm going to start.
So it needs to look, kind of nice, kind of impressive. It needs to.
I'm going to base it off of what we did last week, correct?
You can. I mean, you can pick some different stocks, and they need to be good stocks. I want you to show income. I want you to show return monthly. I want you to show, and the monthly return is going to multiply by 10, not 12. That's going to be your yearly return.
Mm-hmm. I know.
And you're building a forecast. You're selecting stocks, and you're making a forecast. You're putting down some trades. Hey, I'm gonna do this. Is going to get us a dividend. This one's going to get us a cover call. And according to you, you're going to do this trade, get 3.5 points, right? And that one trade, what was it? Churchill Capital. Mm-hmm. You do that one trade right, and that's going to outperform the whole portfolio for that 1 month. I would think it was 86,000, right?
Yeah, something along those lines.
You had like 20,000 share. It was a 10 million portfolio we did, and it was 1.285 million per position, and that gave us 27,000 shares of Churchill Capital.
Yeah.
And that 3.5 point trade, according to you, you can do it. That gives us $86,000. Now, what I say is, just do, for example, you can do one trade a month. Wait for the right time, wait for the most opportune time. Here, trading. Choose. Develop 10 positions. trades and trade only the best one. There's a real estate guy, Robert Kiyosaki. He says he looks at like 100 properties or 100 offers, and he chooses just one. What do you think about that?
Can you say that one more time?
Robert Kiyosaki. He's a real estate guy. He says he looks at 100 offers and chooses one.
Yeah, that one is most probably better than all of those other 99, and he'll keep his job that way.
He'll keep his job, right? Speaking of keeping your job, so if you're doing one trade, you work on 10 trades and you pick the best one. That's why I say one trade a month. You know, you can do 2 trade a month or 3, but you know, eventually you're gonna miss. And we can talk about a trade ratio. A good trade ratio is 3 wins to 1 loss. To 1 loss, which means you'll have 9 wins to 3 losses in 12 trades. The minimum is 7 wins and 3 losses. It's 7 and 3. 7 wins, 3 losses. So if you can get 7 to 9 winning trades, write this down, to 3 losses, you'll be fine. Like going too fast?
No.
Now, like can you get a good stock, you know, buy it at a dip, look at these channels. The patterns tend to repeat. You can understand how you can get, you know, some successful trades in there, right?
Yeah.
Okay, so 7 to 9 wins to 3 losses is a good ratio. Now, like mathematically, do you know why like 6? Do you know why you lose if you just do a winning trade and a losing trade? Keep doing that. Do you know why you're going to lose on that?
Because we're not going to really be making.
Yes.
If it's a 1-to-1 ratio.
Right, a 1-to-1 ratio is actually not a wash; it's a loss in the market. You know about that?
Nope.
Okay, so let's do this. Let's say we have 10,000. Okay. Write this down. All right. Follow me?
Yeah,
It's a
10,000.
small account. Let's say we make 10% return.
Wait,
how much are we at?
10% on 10,000?
Yeah.
So we're up 1,000.
Right, and then what's our total?
We're at 11.
What?
We have 10K and we're up 10%. So in total, we have 11K.
Right, good, 11K. Now, that's the first trade, 1, like that 1. Now we're gonna do a second trade. Let's say we lose 10%, right? Now, where are we at now?
Trade 2, we're up again.
We're at 11,000. Our second trade, we lose 10%.
Yeah, we lose 10%.
What's our total?
Then we go back to then we go under 10K.
Right, what is it?
We're at 990. 9,900.
Where did the $100 go?
Vanished. Not entire pocket.
Let's say we have 100,000 portfolio, and we gain 10,000 on the first trade. We get 10%. What are we at?
Hold on, I'm writing what I just said on the other
Okay.
trade.
Take your time. I want you to get this.
Okay. Now you said 100,000
We're
account.
moving it up to 100,000.
Okay, let me write that
You can
down.
see, you can see it better. You can see it better with 100,000.
Yeah.
We get 10,000. We get 10%. What are we at?
Means we're at 110K.
Now we lose 10%. Where are we at?
Now when we lose 10%, instead of being at 110, we're at 90 something.
Do it on your calculator. 110 times how you do it? Times point.
99,000.
Right. So we lost $1,000.
Mm-hmm.
That's what I'm showing you. So what happened there?
You lost. Okay.
Let's take the 99,000. Let's say we get a good trade. We get 20% return. Okay. Do this in a calculator. 99 times 1.2. That's the 20%.
99,000 times 1.2%. You said
times 1.2. That's 20% gain. What are we at?
118,800. 118,800.
Good. Now take that amount, 118,800, and we're gonna lose 20%, right?
Yeah. So now we lose 20% off
So
of this.
multiply by times 0.8. Where we at?
Times 0.8. Now we're at 95,040.
Okay, so this is what happens when we trade low to the market. If you win lose like that, you're going to end up losing. That's a mathematical fact. Okay. So you have to be really accurate to make it in trading. Very accurate. This is a lesson. You can not trade lows with the market. You can get any percent. You can win 40%, lose 40%, win 30%, lose 30%. You can start off losing, you can lose 40%, then gain 40%. There's no way you're going to ever come back to 100,000. Come back to your amount. I'm showing you that. Understand?
Yeah.
So even at like 6 to 5, you're still losing. Okay. So the minimum is 7 to 3. Write that down. 7 to 3 minimum. And ideal is 9 to 3. Write that down. Minimum. Ideal. So we are gonna miss. We are gonna make mistakes. We're gonna buy a stock at a dip, and it's gonna keep going down. And if we're trading, we could just cut our losses and take a loss. And we will have some. That's the thing about trading. You will have some losses. It's kind of easy to long-term invest because you get a good stock. It's going up. You hold it for 10 years. I mean, you'll probably make decent money. At least you'll get a return. But when you're trading, you can't do that. We have to earn income like a monthly basis, for example. And in earning like a monthly income, you have to sell. Write it down. Traders have to sell monthly income. I say monthly because the bills are generally monthly. Like you have mortgage, we have mortgage. Give me some bills. Mortgage. What else?
Mortgage, car.
Car note.
Mortgage.
Car note finance.
Pay off our car.
What do you have to do every month?
Pay your bills.
What other bills you got?
Water and electricity.
Water and power. Do you eat? You got food? Do you eat?
Yeah, food and clothes.
Food, clothes. You got Netflix?
Yep.
Netflix.
I'll do entertainment.
Entertainment.
Dad pays for that.
Yep.
Eric, what does Dad's not pay for?
dads pay for everything and they never get it back, but what they get is the legacy.
And somebody to change their diapers when they're too old.
Maybe not. But okay, I'll go with that. The kids put their pants in the old folks' home. Here go, Dad. Go into the home. I'll take care of the house for you.
It's imparting wisdom. That's what it's all about, right? Make them successful.
Imparting wisdom.
Yeah.
Bill, you know what we want when we have the kid? We just want to build our legacy. What do we leave behind, really? Legacy. Legacy. Okay, so as a trader, you have to generate monthly income to pay bills, to live off your account, to live off of your account. So what I do, I have some accounts that I have like IRAs. I don't trade those. I just have long-term investment IRAs, right? I'll change the position. I'll sell and buy every 6 months or a year like that. But I have a personal account and a corporate account, which I do trading. So I can live off my account. I pay my monthly bills and I teach you how to do that. So you have like a trading account, and you have a long-term investment.
Your long-term investment account is your corporate?
IRA. My trading account is I have two, personal and corporate. Or you can say business. You can have a business. I have 5 accounts with TD. You can have a business account, corporate account, personal account. The point is, you can have a long-term. You can be a long-term trader for your long-term accounts, like your IRA, retirement account, like that. And you can do an account that you trade, that you generate monthly income. That's what I teach, my specialty. And that could be like a personal account. And oftentimes, your trading account will not outperform your long-term account. I'll tell you that right now. You might not beat the market. You might actually lose money on trading because different reasons. But to be successful, you need to make money, period. You can just put fill in the blank like what you want to make. If you have 5,000, how much expenses? How much you have to make to live comfortably? Give me a figure monthly. Just pick a figure.
You're saying me now or when I'm older?
In 5 years.
In 5 years to live comfortably, to make a month? I mean, like 50K
a month.
Mm-hmm.
I like that.
I
like that. 50K a month. You said. Hey, look, 50K a month. Let's just do that, okay? Now, here's the thing. If you want to generate 50K a month, first of all, your bills are going to be paid. No worries, okay? But you need to make 100,000. Let me tell you why, okay? I'm going to give you the breakdown. Put this down. Breakdown of income.
Eric, it's called private tuition for all the kids. Very expensive. I think he knows what that costs.
Yes. Okay, breakdown of income. Are you ready?
Yep.
10% to tithe.
10% what?
Tithe, T-I-T-H-E. That means you're gonna help people. You're gonna give back. You're gonna.
Mark, it's called tzedakah. It's the same thing. Tithes.
I know.
Maaser. So, Eric, in the Jewish faith, you have to give 10% to charity, off the cuff.
Wonderful. We have a similar thing for Christians.
Exactly. We follow the same beliefs, and in fact, one of the reasons why Mark has to leave at a certain time today is because he will be giving a donation to one of those families, and he's coming to my office to pick up that envelope after this lesson and go and deliver it along with a gift.
Wonderful. You're giving him the right training. So we want to give back. We want to help other people. You know what I like to do. I'll tell you what I do. I'll go to the gas station. I'll just stand there at the register, and I'll wait for someone to come in and pay like they'll pay like, you know how you need, you know, gas is like $40, $30, whatever, fill it up, right? I wait for someone to come in with cash. They'll have like $2.85, and they'll put all their change on the register. This is real, okay? And I'll do, I'll just like, I'll wait for that, and you'll see it like at any busy corner gas station. And I'll just drop like $40 down there and just say, dude, just take it, keep the change. And you won't believe, dude, the response I get. You will not believe. You're my angel, you know, you're my prayer answer, all kinds of, you know, I get hugs, all kinds of crazy stuff.
I love it. It's good stuff.
So you need to make money to help people. You have a responsibility. You have money. You have to, you're entrusted with that money to do stuff, right?
Mm-hmm.
Okay, so you tithe. Okay, now, 20% is for taxes.
It's more than 20.
It's more than 20, but I put it 20 as a general thing because you can have write-offs, right?
Yeah.
So 20 could be like the raw, you know, but then when you have a write-offs, it can be, you can improve that, right?
Yeah.
So you put aside 20% for taxes, okay? So here, expect to pay taxes at the end of the year.
Unless you do deductions, if you're like a 1099, then you do have to pay the full tax at the end of the year because it's not being deducted. But if you get a paycheck, then they are deducting the taxes, and you're not going to have to make much of a tax return. You might even get a refund. Is that right, Eric?
That's right. And I find that 20% is a nice figure to have set aside.
Because Mark, when you're an independent contractor and somebody pays you an invoice, you're called a 1099. So you might be a software developer and you send somebody a bill for like $1,000 and they pay you the $1,000. Well, that's your $1,000 of income. You have to set aside now 20% of that because you weren't pre-taxed on the $1,000. Is that right, Eric?
That's right. And the tax, that's a whole, I have to write a book on that, you know. So I just like to keep it simple. Put aside 20% for taxes and you'll be good. Okay, next is take 10% out of your account for alternative investment.
For what type of investment?
Alternative investment. So like, here's a story I got for you. I know a soybean trader years ago. He is the smartest guy you'll ever meet. He got his account up to $1 million on commodities exchange. And, you know, he's doing great. And I talked to him like, I don't know, 9 months later, he lost everything, okay? And what he told me is, he said, I should have took something out, you know? So like sometimes we'll have these great successes in life and we don't have nothing to show for it. We don't maintain it. So take something out of your monthly profits to have something to show for it. What I like to do, I like to buy silver coins. You know, you can't write a call on silver, can't write a cover call on silver coins, but they tend to hold their value. You can buy gold coins, you can put in Bitcoin, whatever. The point is, you're not just keeping everything in your account. After some time, you're gonna have something to show for it. So I have here, take out the market, alternative investment, have something to show for it, write it down. something to show for it. 10 tithe, 20 taxes, 10 takeout, alternative investment, right?
Mm-hmm.
And then 10% to reinvest. This is the fourth one, to reinvest. So if you have 100K, 100,000 in your account and you make 10% in 1 month, which is great, you probably won't always do that, but you're gonna leave $1,000 in there to build your account up higher. So you'll have 101,000 for month 2. Follow me?
Mm-hmm.
So you are building up your account. You are leaving money in there for reinvestment. You'll get an exponential return. The first month you'll have 100,000. You can get 10,000. Second month you'll have 101,000, right? Reinvest 10%. So this is 50. 20, 30, 40, 50. Follow me?
Yep.
And then the next 50, put the next one is 50. 50%. And then put spend. Live off your account. So here's the thing that I never learned this in school. If you make X dollars, you can really only spend half that money because the money has to go to certain places. And what Americans do, a lot of them, is they'll make 100,000, they'll spend 100,000, and then they'll probably go another 10,000 on credit cards. So, and what's the result? They're broke, right? They have no, they have no investment. They have nothing put aside for taxes. They have nothing to show for it. They go in debt, right? Okay, so that's a breakdown of your income.
And this is monthly basis, correct?
Yeah.
Gotcha.
You're being a strict account. You got to be a strict accountant. Become a strict accountant of your finances. Any questions on that?
No.
Okay, so back to your portfolio. We did 10 million, which is like a good example. And if you can start making those trades happen, then you're going to have a return. You're going to have a decent return. I think it was 24% that we got a year.
I think so.
Most investors don't make that much. Most investors make around 10%, and that's considered successful. So if you're making 24%, you're well above the average. And that goes to say that we don't have to make crazy risky investments that are going to give us 100% return, where we're going to risk our whole account doing so. That's why I wanted you to have a foundation, have some dividends, have some covered calls, because that's not really risky. When you're risking it, it's risky when you're doing trades where you can lose money on that trade, where you buy call options, they go to zero. That's risky. We buy put options, they go to zero. That's risky. Follow me?
Yeah.
So that's why we made Mr. Morgan, because we have to be transparent in our investments. We have to have somebody that we're responsible to. And if you can get that 86,000 trade every month, you're gonna make how much a year?
You can make the 86,000 trade monthly.
That three and a half point trade on the capital. How much are you gonna make at the end of the year?
You can make that 86 every month. It's over $1 million. It's 1.03 million.
Okay, we don't want to overpromise.
Yeah.
We do it times 10. What is it times 10?
60.
We're giving us some slack. We're cutting us some slack.
Yes.
Because we are going to miss. Every month's not going to be easy. You have a shift in the market. So it's like $860,000. And we were getting 24% on 10 million. So that's $2.4 million a year, right?
Yeah. Yep.
So you can do that. Mr. Morgan's going to call you into his office. He's going to give you a company card. He's going to give you a Black American Express card. That's what's going to happen. But the moment you lose money, you know what? You know. Let's say he promotes you to floor trader, and he gives you a couple guys to train. And one of the guys, he's doing all call options. The other guy is doing dividends and cover calls. So which trader, and you're responsible for these guys. And Mr. Morgan says, I'm not gonna lose money. They lose money, that's your money. So we're gonna, so how do you feel about these two new proteges that you have? One's doing all call options. He's buying puts on GME. And the other one's doing dividends and
big gains or big losses. There's no in between.
You have to get that. Am I coming through?
Yeah.
Okay. Any questions on that?
Nah.
So, yeah, I'd like to see your 25 million portfolio. You might want to get a few more, at least 10 positions, I think. Start working on that now. So when it comes time, you're pretty much all ready for it. You can shoot me your notes on that. Any questions?
So 10 positions, $25 million portfolio.
At least don't. I'm just making a suggestion. You're the account manager.
Gotcha.
You need to look impressive.
Fine.
Don't do it because I said it.
Okay, fine.
Do it because you want to do it.
Yep.
You can do 9 or 12 or 15. Speaking of which, did you have you gotten a dividend yet? Have you actually received the dividends since we started the sessions?
Have I started receiving dividends?
Have you honestly received any dividend yet?
I've received dividends.
I want you to get a stock that pays dividends. Look at the X dividend date, which is when you get paid. And I want you to tell me how much dividend you received when you receive it.
So you want
you need to put this into action.
So you want the dividend receiving date?
It's called X dividend date. That's the date that you received the dividend. And I want you to tell me how much dividend you got. It could be $1 off Nike, or it could be $1 off Apple, or if you have one share. How about the White House? They pay 10% dividend, right?
Something around that, yeah.
Can you buy at least a few shares of that in reality and show us when you get the dividend? Can you do that?
Yep.
I want to make it real, because then you're going to multiply that in your head by X times. You want to make 50 million. I'm sorry. You need to have 50 million, but you want to make 50,000 a month. Okay, show me on paper. Show me on paper so when the time comes, you know how to do it. How much money are you going to need to make that? That's a question for you. 50,000. That's 500 grand a year. Not bad, not as much as this. You can probably pay Mr. Morgan's gas for his jet, but you can't buy the building that he hires you in. You can't. You can do a few things with that. Liquid. Okay, any questions?
Nope.
So a couple things about trading. If you can pull up a 6-month chart, you can probably see some decent channels. I like Starbucks. Put down Starbucks. Do you have a stock that has some decent channels for the 3-month or 6-month chart that you know offhand that you can pull up right now?
A decent well, before today, they were decent. Let's see. Let me go to
Oh, they went down? I don't know why my Apple went down 14 cents. I don't know what happened to you.
That's right. That's right.
You know what? That brought up something. Okay, look, you want to manage money, right? Okay, so, an old man gives you $1 million. He says, listen, Mark, I heard about you. I'm going to take a chance on you. I don't want to lose a lot of money. I don't want to have a lot of these crazy swings in the market. Okay? I want my money to be safe, you know? I don't need to make a lot of money. You're going to get your cut, he says, but, you know, I don't want it to be like a roller coaster ride. Now, what do you do with his $1 million? He told you exactly what he wants.
I would invest in covered calls and dividends. I wouldn't do trading at all. If so, very, very minor. If he wants safe and secure, dividends don't fluctuate that much, especially like WHF. If you look at their 5-year, they've been in that $14 range. And then covered calls. Apple's great. We spoke about NVDA last week. They had superstar numbers. You preach.
Eric, you don't think NVIDIA is a volatile stock?
I was just going to call him on that.
All right.
Mark, you said White House, right? WHF?
Mm-hmm.
White Horse.
Okay. I'm sorry. White Horse?
Yeah.
Okay, look, I want you to do something. Give me the high and low today for White Horse.
The high and low of today, you said?
Yeah.
Today's high was 14.45. And the low, 14.18.
Why do you have an echo all of a sudden?
No idea.
So I have 55 cents, right?
From 45 to 19.
19.
45 to 19.
So what is that? 24 cents?
26.
26 cents?
Yeah.
Fluctuation for the day. Now let's look at Apple. Tell me the high and low.
Fluctuation was 26 for Apple. Let's see. Apple's low was 119.89. 119.89. And their high was 126.63.
What's the difference in the high and low?
I'm gonna get it for you right now. 126.63. $6.74.
How much?
6.74.
Okay, let's look at the video.
Video.
Give me a high and low.
Yep. What's their ticker?
NVDA.
Their low on the day was 537.16.
537.16.
Yeah, and a high of 567.98.
567.98.
Yeah, and that fluctuation is $30.
30 what?
$30.82.
30.82. I'm gonna put in one more just because I kind of have a feeling about this. Pull up Philip Morris PM. And give me the high and low.
The high was 87.50. Oh, yeah, the high was 87.50.
87.50.
Yeah. Use that and
I think you're echoing. I think you're echoing off your cell phone. I think your cell phone.
and the low was 86.29.
86.99.
86.29.
So what is that?
That is gonna be 86. $1.21.
Now tell me which stocks here are volatile and which stocks are not.
A volatile stock with this fluctuation would be Apple and NVDA really.
Right, and which ones are not?
The dividend stocks.
Right, so this guy gives you $1 million. This is his life savings. He tells you he doesn't want any wild roller coaster rides. So we can put his money.
Dividends.
In this case,
dividends.
These two, yeah, in this case, you know, it's an example. Like, so you have to trade certain ways depending on your client, what they want. You want to make your customers, write this down. You want to make your customers happy.
If a millionaire gives me a save.
You need to make your customers happy. What did you say?
Nothing.
Okay. We covered a lot. I want you to start working on that portfolio. I want you to get a dividend. And then I want you to get a covered call. Okay. I was doing Skechers, just like the cheapest covered call I have, SKX. You want to look at that. It's like 36 bucks. Hopefully we can do that before the end because I want you to see that money come into your account. And when you do have an off month, when the market turns against us, against your positions, that cover call money is nice because it just comes in, and that dividend money is nice because it comes in. You know, we are limiting our upside on the cover call, but the theory is that we favor consistent income for share growth on the upside, which may or may not come. And I think we've covered that before, have we?
I think so.
The theory of the cover calls is we favor consistent income over share growth, which may not come. It may or may not come. Write that down.
Income. So consistent income favored over share growth.
Which may or may not come. That's the theory of cover calls. Cover call writing.
Or may. Got it.
I saw Tesla was down to 600s.
Yeah.
So that's a roller coaster. Are you gonna put the old man's money in there?
Nope.
No, you can't, because that's not what he wants. He'll be happy with a nice little dividend. Look, 10% from Whitehorse, 5% or 6% from Philip Morris. What's the average? If you get 10% from one and 6% from the other, what's the average?
You get 10% and what percent from the other?
Yeah, 50, even amounts.
No, I didn't hear.
What's the average dividend?
Could you repeat that? I didn't hear you.
If you have two dividend stocks, Whitehorse and Philip Morris, you're getting 10% from Whitehorse, you're getting 6% from Philip Morris. What's the average dividend?
The average dividend is like about 6, 7, 8%.
Exactly. You just add them up, 16 divided by 2, 8.
Yeah.
So the old man's going to be happy with 8% dividend. You don't have to make magic happen. You just have to be patient and disciplined. And don't put his money at risk. That's kind of that's kind of how you have to look at your whole account. You have to be responsible. If you want to gamble, go to Vegas, because you'll get free drinks by attractive cocktail waitresses. I may have overstepped my bounds there, Dad. Sorry.
No, you didn't.
Dogecoin. I don't do crypto. I had a friend who told me to get into Bitcoin like when it was like 1,000. He told me the Bitcoin was gonna outperform the or gonna take over the dollar. I don't know, but he said the Bitcoin's good because if you wanted to send somebody $1 million, you just send it in Bitcoin. There's no IRS, no DEA, nobody's gonna stop you. You know, there's no regulation. You know, they could try to regulate it, I suppose, but so that makes sense to me. Though right now, very few people take Bitcoin. You know, if I wanted to buy pizza, you know, I'd be hard pressed to buy a pizza with Bitcoin. But I think as more people start accepting it, you know, it's going to become more real. So yeah, I think it's a good thing. Don't compare it to stocks, but let me know if you can write a cover call on Bitcoin. Let me know how to do that. I'll look into it. If it pays the dividend, let me know. When we invest in stock, we invest in real companies making a product around the world that has real people working, that has jobs, that have a service or a product that they're making to help people to sell. Bitcoin is like a commodity. It's only supply and demand. So it doesn't, by itself, it doesn't have a direction. If you have a company like, let's say, Apple, who makes a profit, that has a direction that's going up, you know. So that's why I think stocks are better than commodities. Make sense?
Yep.
Of course, Bitcoin, you know, if it's in demand, it's going to go up. So I think you should probably have your hand in some Bitcoin for that reason. I don't know about those other coins. You know, I think those other coins, there's so many of them. There's thousands, I think. Are we done?
That was a lot of information.
Yeah, I want you to have pristine notes in your journal and just send them to me.
Yep, you got it. I'll send them in. Keep in touch.
Thank you, Mark.
I'll speak to you. Bye.